morning. Today is October 17th, 2022. It is Monday. It's a new week. Tom and I are back in the studio. Andrew is not here. He will be gone Monday through Wednesday this week. He is at a summit of other advisors over in, I think,
Great question.
Chicago.
No idea.
Something like that. Somewhere up north
for his birthday.
Tom, good weekend though.
It was a pretty good weekend. We're having a lot of trouble with the audio there. If you guys need me to start the music again, I'm not sure what's going on there, but we can probably run it back a couple more times if we need to.
So I see you're wearing the Tennessee colors today. So good weekend for Tennessee, bad weekend for Atlanta sports, I think. With the Braves losing, although the Falcons
look strong.
Falcons won. So good day for Seattle Seahawks yesterday too. So not all bad news in sports world. Shifting gears. We're going to start talking about policy today. Then we're going to talk a little bit about companies and then what to look at in the week ahead. So on the policy side, looking at the UK, the British pound is back up to 113. It's really rallied pretty strongly. I think people are fairly happy that Kwasi Kwarteng has already been fired as a Chancellor of the Exchequer. This is essentially the Treasury chief, the finance chief. So think of this guy as similar to a Janet Yellen type. And he was summarily ousted after just about 2 weeks in his role. And he said on his way out, Liz Truss is not far behind. So the sharks are circling in the waters among the Tories, the Conservatives there in the UK. It looks like Liz Truss is not going to be far behind in terms of being ousted as the prime minister, which means that King Charles will have to appoint another one. I guess we'll have to get another prime minister here in the UK in the next month or so. And my money would be on Rishi Sunak. He and Liz Truss were the closest to winning the prime ministership last time around. They went for Liz. I think this time Rishi Sunak, who already was the Chancellor of the Exchequer under Boris Johnson, will be the most likely winner there. The replacement for Kwasi Kwarteng is Jeremy Hunt, who is taking a very different tack from Kwasi. Whereas Kwasi was focused on stimulus, Hunt is focused on austerity. He's focused on higher taxes. He's focused on lower spending. And so I think this will be very interesting to see what develops. Right now, the markets seem to like it. The British pound is stronger. The markets are stronger. The full fiscal plan will be unveiled on October 31st, as previously guided. I don't know if this recent rally in the British pound will be sustained. Tom?
Yeah, I mean, the market seems to really like this change. Bonds are rallying kind of across the board, not just in the UK. You know, whether it sticks remains to be seen. I think it's a good opportunity to make some changes if we need to. I mean, it's all up in the air. I mean, if Liz Truss really is out, you know, this could all change in a heartbeat. It's definitely something to keep an eye on. But I think that overall, the market appreciates austerity, is not a big fan of anything involving easing or buying of bonds or further stimulus at this point. It's just going to continue to exacerbate the problems, which are most in the headlines. So hopefully this sticks. Jeremy Hunt's plan goes through. You know, they take their lumps and they move on, and the economy rights itself through. Sort of the hard way as opposed to the easy way, because the easy way is just going to cause more inflation and more problems. So I think that that's a positive thing. But again, we'll see. I mean, it's all up in the air. They may get fired and everybody be changing gears immediately after that.
Yeah, it's so interesting seeing Parliament, how quickly a party will eat its own. It's almost creative destruction, really, as they look for because ultimately the party wants to win seats. The way you win seats is you have to find a prime minister that actually is popular.
Yep.
China is also kicking off its 5-year party congress. This happens once every 5 years. And they're set to reappoint President Xi Jingping for an unprecedented third term. So he's going to start on, he's done 10 years. He'll be looking to do another 5. And he actually already gave a speech. It was about a 2-hour speech. He talked about China's international influence, appeal, and power, and saying that it has increased in terms of its power to shape the world. He wants to focus on technology self-reliance. He says economic development is still the top priority, but they need to balance it with security. And importantly, on Taiwan, he says that it is very much their goal to have complete reunification of our country, and that China will continue to strive for peaceful reunification with the greatest sincerity and the utmost effort. Separately, they have also not released the GDP data, and they are the central bank is working to backstop the weak Chinese currency right now. So the message is very different from the reality right now, but China's guiding light is very clear. They want economic development, but they are also importantly balancing that now with reunification goals. Tom, what are your thoughts on this?
I mean, I think this is essentially Xi Jingping becoming chancellor for life. I mean, he's going to be in charge for the foreseeable future, and I'd be shocked if he didn't just ride it all the way out until death. I mean, he's basically Mao 2.0. I think there's a lot of lipstick on the pig in terms of China right now. I know they're having quite a bit of problems with real estate. They're having a lot of protester problems as well. There was a big story over the weekend where there was a big smoke bomb set off on top of a bridge and some signs up there that said, "We want food, not COVID tests," which is pretty unprecedented. You don't hear a lot of or see a lot of dissent in China, but you can see it now. Which means that people are getting more emboldened and probably aren't super happy that they're basically being placed into a dictatorial system. Not that it already wasn't, but now that we're, shucking off term limits and going for as long as we want to, it's probably not great. People are probably not super excited about that.
I mean, it's no surprise to anyone, but I think the next 10 years is going to be is really going to determine a lot over the subsequent 50 years in terms of what China is and its relationship with the West. Shifting gears to companies, we're seeing some companies, at least two, really struggle with a strategy that they employed, and they're really trying to either back away from them or double down on them. So we'll start with Goldman Sachs. They are merging their investment banking and trading businesses into one business unit. The second business unit is going to focus on their kind of consumer banking or wealth management. And the third division is going to focus on all their leftovers, like the ventures with Apple, the ventures with General Motors, the specialty lender GreenSky. So they're supposed to announce earnings tomorrow morning. And the problem with Goldman is that this was initially a partnership. And then when they came public, they and the partnership was phenomenal because it attracted the highest performers. Because if you were a high performer, you wanted to go to Goldman Sachs because you actually had ownership in the company. And in early 2000s, I think it was, they basically cashed out. The partners cashed out, became a public company, and then they had to attract people with salaries. And the problem with attracting people with salaries at a very high performing entity is that you ultimately end up losing some of those high performers because they start their own, they go to more boutique areas. And Goldman lost some of its prestige within the investment banking community, especially on the trading side. They used to be the kings of fixed income, currencies, commodities trading, and they still are the leaders, but less so than when they had the proprietary desks, when they were really making themselves money, because now they have to make public shareholders money, which is a different set of investors. So that's what Goldman's been doing. Separately, when David Solomon came in, who's the new CEO, he really wanted to expand their retail business, make Goldman Sachs more like a traditional bank. That's not proceeded terribly well. And right now, they're looking to consolidate these business divisions, and it looks like they're shifting a little bit away from that heavy reliance on growing the retail business, which I think is probably a good strategic move, but it's also a little bit of a white flag of surrender.
Yeah, I think they tried to zig towards what everybody else is doing, particularly when there weren't very good spreads in trading. I mean, zero interest rate policy was probably the worst possible thing for Goldman Sachs. They couldn't make a lot of money on trading. They couldn't
low volatility.
Yeah, low volatility. They can't make they make less and less and less money per trade because there's so little yield to suck out of each trade. And then, they try to do markets. They try to move sort of towards the more, Merrill Lynch model. And then the markets changed completely. And I think a lot of that had to do with being publicly traded. I mean, it used to be having a partnership with Goldman Sachs was, the ultimate sign of wealth and prestige. And, if idiots like me and, some of the people on this call can own Goldman Sachs, then anybody can own Goldman Sachs. You know what I mean? So it's lost that luster. And as a result, they've kind of become like everybody else where they just follow the trends. And unfortunately doing that, I think, hurt them in the short term. But if they can ramp that back up, I mean, now's the time to make money on trading. And we saw, Citi have an unbelievable quarter in terms of the trading. And I think that Goldman can do that as well. So I'm very hopeful for the earnings coming out.
I agree. It'll be interesting to see how Solomon manages the culture going forward, as layoffs will be something of an inevitability as a result of this. Meta is also struggling with its transition to the metaverse just a year after making the big announcement. Zuckerberg had a large talk last Tuesday saying that we believe in this vision so deeply that we renamed our whole company after it. And we're in a moment now when a lot of the technologies that will power the metaverse are starting to take off. Well, there was an article in the Wall Street Journal over the weekend that actually had access to some internal memos. And in that, Meta Facebook has a platform called Horizon Worlds. And what this is basically a way to create your own world, and people can go in and participate in this virtual world. This was highlighted in that Super Bowl commercial. The problem is no one's using it. They initially set a goal for 500,000 users by the end of the year. Now that goal is 280,000, but they're only sitting at 200,000, less than 200,000 now. So, and they've been losing users every month. I think that if people were actually coming to the platform and staying with the platform, and that loyalty was high, I think we'd be talking about a little bit of a different tone here. But people are actually leaving. And the reason people are leaving is they couldn't find worlds that they liked. They couldn't find other people, and the people don't look real. The avatars don't have legs. And I think this is the ultimate problem of the social network, is that you are reliant on all these people coming in and gathering. And if there are no people, there's no incentive for you to actually come and join the platform. So it's a chicken or egg thing. And there's no financial motive for people to actually create worlds right now. I think that the tips in the worlds has grand total is $470 or something. Not thousand, $470 over the course of its period. So there's no incentive for people to actually get on. They're getting a little bit defensive. They're saying we're trying to land on the moon, and people are complaining that the coffee machine's not working. But the problem is sometimes these issues, if not fixed quickly, either have to be reinvented subsequently or just canned. And it doesn't seem like they're thinking about canning them, but they may have to reinvent, which will cost money.
Yeah, I mean, I would say the opposite argument of trying to land on the moon and the coffee machine's not working is you got to block and tackle before you can run the hook and ladder, And I listened to the Zuckerberg interview on Joe Rogan a couple of months ago, and he was talking about the lack of legs and arms on the characters. And it has more to do with the VR piece, which is that if they can track where your hands are, but they can't necessarily track where your elbows are. And so if it incorrectly places where your arms are, it causes people to feel weird and out of place. And so it's disconcerting and makes people not like the platform. So the no arms, no legs has 100% to do with the fact that there's no piece that tracks your whole arm. So it's, just seeing your hands makes more sense than seeing your arms in the wrong place. I don't know. It seems weird to me. I don't know who would want to hang out in the VR world, but I'm an old man, so what do I know?
And then finally, Rupert Murdoch is looking to put News Corp and Fox Corporation back together after splitting them up in 2013. He would need a majority of public shareholders' approval on this. It's an interesting proposal. I'm not sure how great of a deal it would be, but essentially News Corp has struggled to really gain a foothold by itself, and Fox is a little bit more cashed up after selling a lot of its entertainment assets to Disney a few years ago. So this could actually make some sense. So, combining Wall Street Journal, New York Post, Fox News, some of these other brands together, you might be able to make a better push for digital advertising dollars. So it's an interesting idea. Okay, looking forward to this week, with Bank of America earnings that came out this morning. The big ones tomorrow are Johnson & Johnson in the morning, and then you have Netflix and JB Hunt in the afternoon. On Wednesday, you have IBM in the evening. You also have Procter and Gamble in the morning, which will be interesting to see how they're dealing with inflation, and Tesla, importantly, on Wednesday evening also. Thursday, a lot of big industrial companies and Dollar General is also reporting. And then Friday, you have American Express and Verizon. So it's going to be a busy week from earnings. We don't have any big tech companies reporting. I think Tesla, you could argue, is kind of a tech company. And then you also have Netflix and IBM. But in terms of the big Microsoft, Apple, Meta, et cetera, those will be all next week. And finally, just talking a little bit about where we are in the markets, I think that you're starting to see that retail traders are actually betting on lower markets. The put to call volume was 3-1, which basically means for every one retail trader who's betting on the market going up, there are 3 retail traders betting on the market going down. And so if the goal is to do the opposite of what the GameStoppers are doing in the world, then this would actually be a great buy signal. And I think that the calendar lines up well for you, because I think that the earnings are actually going to come in okay. And we already have all the inflation news. We know the Fed in early November is going to hike 3 or 4 times. That's all baked in at this point. So I think that the equity markets may rally perhaps significantly over the next couple of weeks. We don't want to chase that aggressively, but I think that if it happens, we shouldn't be surprised, and we'll let it run a little bit and then start trimming. Tom?
Yeah, I would agree. I think there's going to be another couple days in the next couple of weeks where people will be like, "Hey, maybe the Fed stopped. They're gonna pivot again," because we keep riding that wave, and it's going to come. It's going to be the first news story on Bloomberg, and I think that's the day. The market's probably going to be up like 2.5% for no reason on no news. I think that's the day to start trimming, because we've gone through this cycle 3-4 times this year. I still think all the risk is to the upside on hikes, and the Fed doesn't know where the rate is that they're trying to hit. And so I think we just continue to see that pattern replay itself, and it's a good time to create cash.
Yep, I agree. Last thing, happy birthday to Andrew. His birthday was yesterday, so happy birthday to him. And we will see you tomorrow at 8:30. Have a great day.